Thailand's 2025 tax shakeup, what it could mean for expats and retirees. What the plan is, in plain English. Thailand's finance ministry wants to launch a new tax system in 2027 called a negative income tax. Here's how it works. Every adult citizen and business must file a tax return. If your income is below a set threshold, instead of paying tax, the government will top up your income. If you're above the threshold, you pay tax normally. The Finance Ministry says it's building a digital data system covering about 60.8 million people and 600,000 businesses to make this work. Nation Thailand. A report from Thai Examiner adds that by 2027, all adult citizens, all businesses, and possibly even foreign residents will be required to file tax returns. This foreign residents part is not yet confirmed in law but has been reported in Thai media. Gains for Thailand and Thai people. Better support for the poor. If it works, the poorest families get reliable cash transfers instead of fragmented welfare programs. That helps fight loan shark dependence and income shocks. Nation Thailand. More tax compliance. Universal filing means fewer people can hide informal or cash income. Over time, this broadens the tax base and raises fairness. Nishimura and Asahi. Smarter policymaking. The new ARI Score data platform combines tax, banking, and welfare data, giving government a clearer picture of household debt and poverty. Nation Thailand. Risks and costs. Paperwork headaches. Millions will be filing for the first time. Informal workers, elderly citizens, and people without easy digital access may struggle. Errors and appeals. Large systems always misclassify some people. No clear appeal process has been detailed yet. Privacy and cybersecurity. Collecting data on 60 million people makes hacking or leaks a serious risk. Thailand's PDPA law is being enforced more strongly since 2024. But whether government systems meet the same standard is uncertain. Privacy matters. Tillich and Gibbons. Who wins and who loses? Poorest households big winners if payments are on time and thresholds are fair. Middle class mixed. They'll likely pay more gain stability and clearer rules. Lifestyle to income checks will make underreporting harder. Small businesses, SMEs, short-term pain from stricter filings, but in the long run, fairer competition as cash-only firms are brought into the net. Is this just about collecting everyone's digital data? Yes, by design, the system links tax, banking, welfare, and credit data into one database. That is a big increase in state-level data collection. Protections exist under PDPA, and fines for misuse are now real, but execution quality will determine trust. Corruption context. Here's the elephant in the room. Corruption in Thailand is high. Thailand scored 34/100 on Transparency International's 2024 index, rank ~107/180. NACC 2024 reported bribery cases in the energy sector, PTTEP. The Anti-Corruption Organization of Thailand highlighted early release and special treatment in big corruption trials. Civil groups using open contracting tools found irregularities in state procurement. Transparency.org, Nation Thailand, open-contracting.org, offshore technology. That means unless contracts for IT systems, payments, and audits are open and independently checked, the money meant for welfare could leak. Will government officials' earnings be checked? If every adult must file, civil servants too should face scrutiny. Their salaries and bank accounts can be matched against disclosures. But here's the catch: political will. In practice, whether officials are audited equally will depend on oversight bodies and how independent they really are. The foreign residents must file 2-line and your proposal. Current law. Foreigners already pay Thai tax if they're tax resident and earn income in Thailand. New 2024-25 rules also tax foreign income if remitted into Thailand. The idea that all foreign residents must file by 2027 has been reported by Thai Examiner, but not yet confirmed in official regulations. Scale of foreign residents in Thailand. Total foreign residents, 3 to 4 million, 2024. Foreign retirees, 143,000, 2024. Foreigners married to Thais, about 10,000 on record in 2023, but possibly up to 72,000 because of incomplete data. That's a big community and an untapped source of tax revenue. Can foreign residents legally run small businesses now? No, not under current law. Any work in Thailand, even YouTube income from abroad, requires a work permit and the right visa. Small retail shops are reserved for Thais under the Foreign Business Act. Nat Lex, Ministry of Foreign Affairs, Tillich and Gibbons. So today, a foreign spouse or retiree can't just open a shop or run an online side business legally. A fairer, smarter idea: let long-term foreign residents work in microbusinesses. If Thailand created a special visa plus tax channel for long-term foreign residents, spouses of Thais, retirees, 5+ years residents, it could collect personal income tax and VAT from small foreign-run businesses, bring foreign currency into Thai banks, link tax filings to visas, making compliance automatic. Policy model could look like this. Eligibility: foreign spouse of Thai retiree 5+ years resident. Allowed activities: art shops, online content, freelance software, etc. Caps: income revenue limits to protect Thai jobs. Compliance: Thai bank account plus e-filing plus linked PayPal. Visa renewal: conditional on tax clearance. This would be fairer, transparent, and give both sides long-term benefits. How much money could this raise? Ballpark estimate. Target group: 200,000 or 250,000 eligible foreigners. Likely uptake: 100,000 to 125,000 join. Average annual income: 360,000 THB, $10,000. Tax per person: 23,000 THB year. Total PIT revenue: 2.3 to 2.9 billion THB year. Visa fees: another 2 billion THB year. Combined impact: 4 to 5 billion THB year, $121.35 million USD. That's small compared to Thailand's 2.7 trillion THB budget, but it's clean money, foreign currency, and supports local spending. Great catch. Here's exactly how I built those figures, plus a correction where I'd initially simplified the tax math too much. What I did, step by step. Picked a population base, who could join the scheme. Foreign residents, 2024 3.4M. I used the midpoint 3.5M. Subtracted retirees, 143K, because many wouldn't work under this scheme. Eligible pool almost equal to 3,500,000 to 143,000 equals 3,357,000. Assumed a participation rate. Hypothesis that 20% of this eligible pool would opt into a legal microbusiness online work channel. Participants almost equal to 3,357,000 times 20% equals 671,400. Set 3 income scenarios, per participant, THB year. Conservative, 300,000. Moderate, 600,000. Optimistic, 1,200,000. Important correction: applied the progressive Thai PIT brackets, not a flat effective rate. Brackets used, no allowances, to keep it clean. 0 to 150K, 0%. 150 to 300K, 5%. 300 to 500K, 10%. 500 to 750K, 15%. 750K, 1M, 20%. 1M 2M, 25%. 2M 5M, 30%. 5M, 35%. Per person tax with those brackets. 300K income 7,500 THB. 600K income 42,500 THB. 1.2M income 165,000 THB. Scaled up to the participant count, almost equals 671,400 people. Conservative, 671,400 times 7,500 equals 5.04 billion THB. Moderate, 671,400 times 42,500 equals 28.53 billion THB. Optimistic, 671,400 times 165,000 equals $110.78 billion THB. How this relates to the earlier 4 to 5 billion THB estimate. That earlier 4 to 5 billion THB figure was a cautious base case using a smaller participant pool, almost equal to 100k or 125k, per person tax almost equal to 23k THB, plus visa fees, 2 BN. This newer scenario uses a much larger pool, almost equal to 671k, and shows the sensitivity to participation and income. It excludes visa fees and ignores allowances credits, so it's a pure pit view. Caveats that can move the totals. Allowances and deductions, taxpayer allowance, spouse-child, expense deductions. Would reduce pit below the numbers above. Compliance uptake might be lower than 20%, eligibility rules, admin friction. Income mix, some business income gets cost deductions, some foreign income not remitted. Double tax treaties platform WHT could change the collection point. Final takeaway. The reverse tax plan could be a game changer for Thailand's poorest, but only if corruption is controlled, privacy is safeguarded, and officials face the same rules as citizens. For the middle class, it's more filing, more scrutiny, but possibly better services if waste and leakage fall. And for foreign residents, if Thailand really wants fairness, stability, and new revenue streams, then allowing long-term residents to run small, non-displacing businesses under a regulated visa tax scheme could bring billions into Thai banks and benefit everyone.
If you found today's news informative, hit that like button, share this video, and don't forget to subscribe for more updates. Make sure you have a great day.